We have the rand trading at 722 this morning, and of course it went down to 722 yesterday. That was after starting closer to the 730 mark. Where did that strength come from?
Stephen, I think after the better than expected PMI data on Wednesday, and then yesterday markets reacted very well to the ECB's post-interest rate meeting. President Trichet indicated that they wouldn't be withdrawing stimulus anytime soon, and I think that's what people had been worried about. So markets still quite buoyant on the back of what seems to be improved global sentiment.
So, of course, risk back on the table for the moment. Do you think it could come just as easily back off the table when we see those non-farm payroll numbers this afternoon?
Yes, Stephen. I mean, that remains the major currency risk today, especially as far as the rand is concerned. If payrolls data disappoints, you could see renewed risk aversion coming back.
Just taking a look at some of the local factors we had yesterday. Vehicle sales coming out looking pretty positive. That's vehicle sales for August. Of course, we did have that new carbon emission tax coming in the 1st of September. Do you think to some extent that may have driven August sales?
Well, Stephen, that seems to be the main reason at the moment. We saw quite a big surge in passenger vehicle sales, which we think is related to the looming tax. But if you look at the data, particularly on the export side, it was quite badly hurt by strike activity. So we're expecting a moderation in vehicle sales in the coming months.
We also had Reserve Bank Governor Jill Marcus speaking yesterday at the University of Johannesburg in Soweto and saying that a rate cut is not a given. Do you think we might have become a little bit too exuberant in our expectations of a rate cut this month?
I don't think we've become too exuberant as far as this month is concerned, Stephen. I think perhaps what the governor was trying to caution against is any expectations of future rate cuts. There have been talk, some people are now talking about the possibility of a rate cut in November as well. So I think she was just trying to downplay expectations and remind people that it's never a done deal when it comes to interest rate decisions. And the bank is always forward-looking in terms of its decisions.
Of course, she also said that the SARB continued to grapple over the question of what to do with the strong rand. Not really giving an indication, though, on the thinking at the SARB at this stage, though.
Well, I mean, there have been quite a few comments from senior officials at both the Treasury and government and the Reserve Bank with regards to the strength of the rand. I think they're trying to emphasize that government really is concerned about the rand at current levels, but also trying to reassure markets that whatever steps they take, if any, to limit the strength of the rand are going to be well considered.
Going back to those jobs numbers this afternoon, of course, 100,000 jobs expected to have been shed last month. What sort of reaction do you think we'll see from the rand and from the rest of the currency markets if those numbers are worse than expected? We currently have the rand at 722. Of course, last week it went up to 743.
Well, Stephen, I mean, we would expect, I mean, if jobs data comes out much worse than expected, it depends really on whether this spikes a renewed bout of risk aversion. We think that the rand is still going to hold steady below the 730 level, but as indicated earlier, if the data is much worse than expected, then we could see investors start to pull out of risky assets as global growth concerns start to become more prominent once again.